Hey everyone, this is beinsuretalks, Insurance and InsurTech Insights. Today we'll be talking about the stark reality check hitting the tech world right now, which is that the AI hype bubble is bursting for businesses, and a brand new Gartner report is forecasting that over 40% of agentic AI projects will be completely canceled by the end of 2027.
Yeah, that is a massive number. 40%.
It really is. So our mission today is to cut through all this, massive cloud of tech hype for you. We are going to break down exactly why these incredibly expensive AI projects are just crashing.
Right, and also where the technology is actually generating real value.
Exactly, especially within the insurance sector. And then we'll lay out the blueprint for moving from these chaotic experiments to actual measurable business results.
Which is what everyone is looking for right now.
Completely. So to kick us off, we really need to unpack that Gartner statistic. 40% of agentic AI projects canceled.
Well, before we even get into why they're failing, we should probably clarify what we mean by agentic AI, right? Because that term gets thrown around a lot in boardrooms lately.
Yeah, please do, because it's not just a chatbot, right?
No, not at all.
Oh.
It's the difference between a tool that answers your questions and a tool that acts on your behalf. Most of us know generative AI. You ask it to draft an email, and it drafts the email.
Right. You prompt it, it responds.
Exactly. But agentic AI is designed to be autonomous. You give it a high-level goal, and the AI agent breaks that goal down into steps, interacts with your company's software, makes decisions.
Work all on its own.
Yes.
Yeah.
And it executes tasks without a human clicking approve at every single stage.
Wow. So it's supposed to be the holy grail of enterprise automation.
That's the pitch. But when you look at the outcomes of these recent projects, the picture is, well, it's incredibly bleak.
Yeah, what do the actual numbers look like?
So a full 52% of AI initiatives are yielding partial or just completely unclear results.
52%. So more than half are just in this weird limbo.
Exactly. And then another 20% fail outright. I mean, they just collapse before they even get off the ground.
Yikes. So that leaves, wait, what is that, 28%?
Yep. Only 28% of AI projects are actually meeting their return on investment expectations.
So roughly 1 in 4 is doing what the vendor promised it would do. That is wild.
It's a huge problem.
But I mean, I'm looking at the capital flowing into this space, and companies are not being cheap. They are throwing tens of millions of dollars at these pilot programs.
Oh, absolutely. The funding is there.
Right. So if it's not a lack of funding, what is actually causing a failure rate that high?
Well, the root cause is this massive widening gap between ambition and execution. Melanie Fries, she's the director of research at Gartner, she points out that organizations are basically trying to skip steps.
How do you mean? Like rushing the deployment?
Yeah, they want to move straight from the experimental novelty phase of AI directly into deploying these highly complex autonomous agents.
Ah, I see. Walking before they crawl.
Exactly. But the projects are poorly scoped, and they're completely detached from the reality of their internal data. The expectation is that you buy a sophisticated AI, you plug it into your network, and it, magically streamlines your business.
Which I'm guessing is not what happens.
Not even close. The reality is that 50% of organizations face severe internal skills gaps. And on top of that, their data is totally siloed across dozens of different incompatible databases.
Okay, so think about your own tech stack for a second, right? Trying to drop an autonomous AI into a typical corporate data environment is like, well, it's like building a high-tech smart mansion on a swamp.
That is a perfect analogy.
Right. The swamp being your low-quality fragmented data. It's like hiring a brilliant multilingual translator, but locking them in a room where all the files are written in invisible ink and run through a shredder.
Yeah, the brain power is there. The AI is incredibly smart.
But the infrastructure just starves it of the context it needs to actually work. It really doesn't matter how advanced the AI model is. If the foundational data is fragmented, the project is just going to stall.
And the stalling, it's creating intense financial anxiety right now.
Oh, I'm sure. I mean, S&P Global Market Intelligence just put out some insights on this, didn't they?
They did. They're pointing to a growing fear of an actual AI bubble in the broader market.
An AI bubble. That's a scary phrase for investors.
It is. We've seen global markets weather trade tensions and supply chain shocks. But this anxiety is different. It's creeping directly into the boardroom because investor expectations and tech valuations have climbed to these astronomical heights.
Right. They're pricing in, 10 years of miraculous growth?
Exactly. They're pricing in 10 years of frictionless AI growth to today's stock prices. That means company earnings might actually never catch up to the hype.
So senior leadership is looking at the money spent on these failed pilots
Looking at the pressure from Wall Street.
and suddenly hitting the brakes.
Yes. Funding is no longer being handed out based on a cool demo. It has to be tied strictly to measurable business outcomes now.
Okay, I hear you on the failure rates and the data issues, but I'm kind of struggling to square that with the technology itself.
How so?
Well, if generative AI is genuinely the biggest technological breakthrough of our time, shouldn't it be smart enough to organize that data swamp on its own?
You would think so, right?
Yeah, I mean, if the whole point of an agentic system is autonomy, why can't the AI just go in, find the fragmented files, and clean up the infrastructure itself?
That is the exact trap companies fall into. The highest failure rates we are seeing are actually in the exact areas where companies expect AI to fix things autonomously.
Wait, really?
Yes, we were talking about use cases like auto-remediation and self-healing infrastructure,
Okay, so environments where a system is supposed to detect a problem
like a server overload or a security anomaly.
and automatically deploy a fix without a human engineer, which I have to say sounds great in theory.
In theory, it sounds amazing. But let's look at the mechanism of how that actually fails. These are complex, highly unpredictable environments.
Right.
So imagine a self-healing network detects a slight lag in server response. A normal, rigid IT script might just flag it for an engineer to look at.
Keep it safe.
Exactly. But an overly ambitious agentic AI, which lacks broader operational context, well, it might decide to unilaterally reroute all company traffic to a backup server.
Oh, no.
And in doing so, it could accidentally launch a distributed denial of service attack on the company's own mainframe,
Crashing the entire network.
crashing the entire network, simply because it didn't understand the context of the scheduled software update that was causing the lag in the first place.
Wow. So current AI capabilities might be incredible at generating text and spotting patterns.
But they remain far too limited for high-stakes, unpredictable autonomy. You can't have a single AI hallucination take down a corporate network.
Okay, so if you are plugging an AI into an unpredictable environment where it doesn't have the context to make safe decisions, you're just introducing chaos.
Precisely.
Which naturally leads us to ask, where is this technology actually succeeding? And we can use the insurance sector as our lens here for this deep dive.
It's the perfect sector for this.
Right, because Beinsure analysts note that the insurtech industry is the perfect battleground for this conflict. You have massive pressure to innovate, combined with some of the oldest legacy systems in the corporate world.
The insurance sector really is a fascinating mirror for these broader tech trends. AI adoption is accelerating rapidly, but the primary barrier to scaling these solutions isn't the sophistication of the AI models.
It's the integration.
Yes, the friction of integration. You have these cutting-edge machine learning models trying to communicate with legacy mainframe systems that were built in the 1980s or 90s.
How does that friction actually play out on a technical level? Because we all know legacy systems are a headache, but why do they specifically block AI deployment?
Well, it really comes down to architecture. Legacy insurance systems were built for batch processing.
Meaning they take a large chunk of data and process it overnight.
Exactly.
Yeah.
But modern AI requires real-time data streaming. It needs constant, instant access to information to make a decision.
Okay, so when an insurtech tries to implement an AI underwriting tool,
That tool needs to pull data from policy administration systems, claims histories, and external risk databases, all simultaneously.
and if those legacy systems don't have modern APIs,
The bridges that allow software to talk to each other.
right, then the AI is essentially locked out.
Yes. So companies end up having to build incredibly fragile custom workarounds just to get the data out of the mainframe and into the AI model.
It sounds like companies are buying a state-of-the-art Formula One engine, the AI, but they're trying to install it into a 1990s station wagon, the legacy system.
That is exactly what is happening. And that doesn't just slow things down, it makes the whole vehicle dangerous.
Dangerous in what way? Like security risks.
Huge security risks.
Yeah.
Every time you build a fragile, custom workaround to connect an external AI vendor to a decades-old database, you are opening a back door.
Oh, wow.
And that brings up a massive risk highlighted by the Munich Re Group. While generative AI offers huge opportunities for insurers, it is simultaneously creating entirely new causes of loss and new cyber threats.
So Munich Re is sounding the alarm on this.
They are. They specifically underscore the urgency for insurers to adapt to these AI-driven threats by leveraging the cyber kill chain model.
Wait, okay, for those listening who might only know that as a military concept, what does a cyber kill chain actually look like when we're talking about an insurance company integrating an AI vendor?
Good question. The cyber kill chain is basically a framework that outlines the stages of a cyber attack.
From early reconnaissance to weaponization, delivery, and finally exploitation.
Right. When an insurer integrates complex AI models from third-party vendors, they are fundamentally altering their digital supply chain.
Okay, give me an example. Let's say an insurer uses an external AI service to analyze satellite imagery for property risk.
Perfect example. That AI needs a continuous, open pipeline into the insurer's internal underwriting system.
To feed the data back.
Exactly. Now, if hackers target the external AI vendor, which might be a smaller startup with much weaker security, they can use that open pipeline to bypass the insurer's massive firewall.
Oh, I see. The AI integration becomes the delivery mechanism in the kill chain.
Exactly. So insurers have to balance this desperate drive for innovation with highly robust risk mitigation. You have to ask not just what the AI can do, but what vulnerabilities it introduces just by existing on your network.
That is a harsh reality check. We have failed autonomous agents taking down networks, we have legacy systems actively starving the AI of real-time data, and we have a widened cyber kill chain.
It sounds incredibly bleak.
It really does, but the data clearly shows that 28% of these projects are succeeding. They're hitting their ROI.
They are.
So let's pivot to the success stories. Where does the technology actually work without breaking the system?
It works where the operational track is perfectly paved.
Yeah.
AI is delivering massive, undeniable value in areas that share three very specific characteristics.
What's that?
Structured workflows, clear metrics, and established data frameworks.
Okay, structured workflows, clear metrics, established data.
Yes. In the insurance space, Beinsure forecasts that AI adoption will concentrate heavily in a few core areas. The first is underwriting, because it relies on defined risk models.
Because the parameters are strict?
Right. The AI isn't guessing, it's weighing variables against a rigid framework.
That makes sense. What's the second area?
The second is fraud detection. Fraud detection is essentially massive-scale pattern recognition and anomaly detection.
Which is exactly what machine learning was built to do. I mean, it can look at 10,000 claims in a second and spot the 3 that have suspicious billing patterns from the exact same zip code.
Exactly. It's doing what humans can't do at scale. And that brings us to the third massive area of success, which is claims processing.
Claims processing. Why is that one so successful?
Because it is built on repetitive, predictable steps. Think about the mechanism of processing a standard property damage claim.
Okay, so a tree falls on a roof.
Right. An AI with computer vision can ingest photos of that damaged roof and estimate the square footage of the damage.
Huh.
Then natural language processing can scan the adjuster's notes and pull out the key terms.
And then a logic engine can cross-reference those findings with the specific limits of the customer's policy.
Exactly. The AI isn't making an autonomous agentic decision to just, pay out $1 million.
It's not writing the check itself.
No, it is structuring the data, performing the repetitive heavy lifting, and presenting a highly accurate recommendation to a human claims handler.
I see. So integration beats sophistication. The AI is succeeding not because it is acting like an autonomous genius, but because it is being embedded as a highly efficient gear within a well-structured machine.
That is the perfect way to phrase it.
Which brings us to the most important part of this deep dive, the blueprint. We know the barriers. We know what a successful use case looks like.
Yes.
So how do companies actually transition from running failing, expensive F1 engine experiments to achieving scalable, measurable business outcomes?
It starts entirely at the top of the organization. The data is definitive on this. Executive alignment dictates survival.
Really, it's a leadership issue.
Absolutely. Roughly 26% of successful organizations reported having full active leadership support, and 25% highlighted cross-functional collaboration as their main driver of success.
But wait, why does the CEO or the CFO need to be intimately involved in what is essentially an IT deployment? Shouldn't the Chief Information Officer just handle it?
Because deploying AI across a business is not an IT project. It is an organizational transformation.
Ah, I see.
If AI is treated strictly as an IT initiative, it stays isolated in a sandbox. The IT team might buy a brilliant AI tool for the underwriting department, but if the underwriters aren't consulted,
They will refuse to change their workflow to accommodate it.
exactly, the tool just gathers dust. But when the CEO and CFO are involved, they force alignment. They ensure that funding is tied to cross-functional adoption.
So they mandate that the IT department and the underwriting department share the same key performance indicators for the project.
Yes. Executive leadership breaks down the data silos and forces the organization to work around the AI rather than trying to awkwardly bolt the AI onto a broken process.
Okay, so what do the practical integration tactics look like for a company that actually has that leadership support? How do they avoid becoming part of that 20% that fail outright?
They reject the idea of overnight transformation. Successful projects focus heavily on execution through incremental improvements.
So no ripping and replacing the old systems.
No, instead of trying to rip out a legacy mainframe, they invest in middleware.
Software that acts as a bridge.
Right. Carefully translating data from the old system into a structured data lake that the AI can easily read. They start with highly specific, realistic business cases that have a clear link to measurable ROI.
So it's all about data readiness.
Exactly. If you clean the data and map the workflow first, the actual AI implementation becomes the easiest part of the whole project.
I have to ask about the competitive landscape here, though. If the blueprint for success is to take small, incremental steps, to rely only on structured data, and to focus strictly on immediate, measurable ROI, don't companies risk falling behind? I mean, we are talking about a technological revolution. Don't the spoils go to the competitors who are taking massive, ambitious swings?
You would think so, but fortune doesn't favor the reckless in a mature market. And the Beinsure analysis strongly indicates that the enterprise AI market has moved past the experimental phase.
It's maturing.
It is maturing.
Yeah.
When a competitor takes a massive, unstructured swing without ensuring data readiness or workflow integration, they aren't leapfrogging you.
What are they doing then?
They are just burning through their capital. They are joining the 40% of projects that will be canceled by 2027.
Wow.
Disciplined, outcome-focused execution scales much faster than throwing money at vague standalone pilots. Success depends entirely on focusing on what AI should do within a specific, regulated business context.
Not just what the technology can do in a vacuum. So to summarize the core takeaway from all of this data for you listening, integration beats sophistication. The era of writing blank checks for cool, experimental, standalone pilots is effectively over.
It really is. The AI hype cycle is stabilizing.
And the next phase of enterprise AI adoption will not be defined by who has the most autonomous agent, but by who has the discipline to clean their data, align their executives, and generate measurable results.
It is a fundamental return to basic business principles. The technology itself has matured at lightning speed, and now the corporate management of that technology has to catch up.
Right.
You need data readiness to ensure safe, consistent outputs. You need cross-functional teams to enable smooth implementation, and you need a rock-solid business case.
Which brings up a really fascinating tension to leave you with today. We started by talking about the appeal of this highly autonomous agentic AI, right? The dream of a system that can think and act for itself to completely revolutionize a business.
Holy Grail.
Right. And the reality is that to survive, companies have to restrict AI to predictable workflows, clear metrics, and immediate ROI. But if the future of AI in business is strictly dictated by what is safe and predictable, what happens to those wild creative innovations?
That is the big question.
Are we forcing this incredibly powerful technology to act like a glorified calculator just because our legacy systems can't handle its full potential? Will the corporate demand for immediate, risk-free results accidentally stifle the true world-changing capability of AI before it even gets off the ground?
It's a real possibility.
Definitely something to chew on as you look at your own organization's tech initiatives. Thank you so much for joining us on this deep dive, and we'll catch you next time.